Warning, this is all financial advice. You can invest in any way that will make you feel comfortable. This is just a full breakdown of the stock to help you invest into a company that will help you grow your portfolio for the long term. Thank you.
It's time to hone your skills. You'll certainly need it.
Hello guys, my name is Kool-Aid Man 100X. How you guys doing? Welcome to Black Buddy. So, black people, listen, we're going to be reviewing Sony. Now, a lot of people have been waiting on this for me to review and see what's actually going on under the hood of Sony and see why they dropped substantially to $20 a share. Crazy work. So let's jump into it. Let's see if Sony pays dividends like we like to put in the company and see if we get it back right now. Sony does pay dividends and pay semi-order dividends at 76%, most of it in June 8th, which is crazy. We look up Sony, we go to their dividends here. It actually had a growth of 1,000, so right now they've been making 46, 47, 47. September 2025 was their dollar, and they dropped down to 5% right now, 5 cents. God, boy, y'all really messed up. So what I like to do is look at the charts here too as well. Within a 6-month span, they're in the red. Golly. Their lowest right now is $19 within a year. They're still in the red. Their key moment actually dropping the lowest under $20. In a 5-year span, they were actually doing good, but they actually peaked up at what I would say 30. Then they took some natural drop. So right now, imagine owning Sony in 1986 for nothing. Actually, $1.61. That's pretty crazy. Sony took a hit within a year right now, but God, they took a big hit. They actually got 95,000 employees. So, man, they actually been walking off, I guess. You look at it that way. So let's go under the hood, really, and go to the cash flow. Net income of Sony is $82.87 billion. There was actually $1 trillion, but they took a big hit this year. Ooh, Sony messed up bad. The cash operation and cost of running is $592 billion. So you can just slash this in half because to run your company is half of your net income. So y'all might be running in the millions right now, which I'm not surprised. Inventory is here, 41.24 billion. Makes sense. Cash from investing, they're running in the negative. So they've been leaning on their company too as well with their stock exchange. That's not good. Cash from financing too as well. Nothing. They actually running in the negative, so they owe people to run. Ooh, Sony, y'all are not good. Cash flow 671 billion, which you might as well slash that in half because they're running in the negative because their unleveraged cash is what they actually run. So slack off 681 billion to that 71. They're actually running at a profit of $1 million. So they're not even in the billions no more or trillions. They haven't been in that since 2 years from now. So that's dead news there as well. So let's go to the spreadsheet and really get into it. Let's see here. Inventory, they got 1.23 billion in inventory. Makes sense. Only got cell phones and everything. Electronics makes sense. Really not, Other current assets, yeah, the company, they're worth trillions. Yeah, of course that. The company is worth trillions, but y'all are not profitable anymore. Total assets, 15.6 trillion, which is very good. Short-term borrowing, 500 billion. So they're leaning on trying to make a profitability. So they're trying to get out the negative, basically. So, man, Sony been behind years. That's not good. And their debt, 824 billion. So this is where all your money going is. You created debt. And you created the debt in the leases and a portion of the leases and your liabilities in the trillions. So, that is not good at all. Your total assets is in the trillions. So everything is pretty much good as far as your asset of Sony. but your actual profitability and your shares are tanking bad. So we can see the earnings call here. They took the enterprise earnings calls off. Interesting. But they're making money, trillion. So pretty much they've been making their money from Sony, from everything for years and years. So the revenue is always going to be perfect, but the overall share of the company is falling, which is not good. So let's jump into the bearish and the bullish. So the gaming segment is poised by significant recovery driven by the high-profile title launches, including Grand Theft Auto 6, Monster Hunter Wildlands, which are expected to boost. Yo, what's up, guys? This your boy Kool-Aid Man 100X. I want you to hit the link in the description below for my zero investment books. We have a quick sale going on for $7. Link will be in the description below or in the comments below as well, so you can get a chance to get the $7 deal and other things that you want to learn how to invest and take your investing to the next level. So I hope y'all enjoy. I'm gonna catch you guys there. Software subscription sales and profiling the games and network services revenue growth approximately 5% by 2027. I doubt that. I don't see them growing off of GTA. I think that's why they put that ad out for GTA back then. When they had the little app thing, they had the color GTA and stuff. That's when GTA was. They're trying to buy the profitability for people to buy PlayStation 5, because now that they did this for not being physical media, it's kind of killing them. Because now when GTA 5 is going straight digital, what's going to be the use of pre-ordering? That's why I said, why would you pre-order the game if it's digital? It's never running out. And people are so like not thinking, because I had to think about that myself. I said, why am I pre-ordering this? I'm not getting a disc. I was kind of thinking about it because I said, man, if I pre-order, I can get the original disc and stuff, and it would be worth something in the future. Like, I still got my San Andreas disc and stuff like that when they said the N-word on there, because there's certain words that would be worth money for collector's items. So take that into account. But no, this all this doesn't make sense. The structure of layoff of gaming, yeah, Bungie combined. They messed up Bungie bad. Because what's that game? That game everybody was talking about, Destiny. They sabotaged that. They sabotaged Destiny. I believe they sabotaged that game for y'all, and that's what surged the company for them to sell it. Because when they bought Bungie, they thought Bungie was going to be the Halo killer, but which I would suggest. This is my opinion. If y'all had Bungie, that means I hope, if I'm correct, they should have Halo. So why not bring back Halo features to, but neither here or there. Mixed quarterly earnings and earnings from shares are missing because since it's expect that higher trigger sharp. So in terms of gaming growth and fooling the negative market segment, the caution. And it's crazy. They haven't mentioned nothing about the physical media situation. And that's 90% of why Sony is getting killed in the shareholding position, because they have no leverage with that. And the tariffs is really killing them too as well. So they have to import that. So they're taking a hit on that. They're taking a hit on the people. They're taking a hit on the systems. Sony is really getting hit by all means and trying to really cover it up and say, oh, people want to get over it. But man, if they really sustain this is not going to be good at all for them too. So me personally, no, I wouldn't even go the route of trying to invest in Sony. So let's look at the analytic assistance. Currently a buy based on the rating for this. The average price is 28 potential, all that stuff, but they consider this a buy. The buy 2, hold 1. So that's kind of crazy. Only 2 for the consensus actually makes sense, but overall company alone, yeah. But if you're investing into Sony right now, this would be the best time. I hate to say this. Sony right now, if you got $20 in your hand, go and scoop it, man. Go and scoop Sony, bro. There's no way you shouldn't pass this up right now. And if you can catch it, if I was investing in the Sony, I would probably catch it till it hit. For some reason, I got a funny feeling Sony is going to hit $15 a share. If you can scoop this within $15 a share, you're making you some money. You're making you some really good money, because let's look at the numbers here. So we always times that by the shares we buy. So we got 2070 times 10 shares. That costs you $207 right now. Very cheap, by the way. So we do 2070 times 50. I'm not mistaken. I'll put that in wrong. I'm sorry. 2070 times 50. 1,035 of Sony right now. And if we do 2070 times 100, it'd be $2,070 right now for Sony. So if you got the money right now, this is the best time to invest in Sony before they surge back up, because Sony's gonna surge back up. It's inevitable. It's not just the gaming with Sony. They got electronics, other stuff too as well. People buy. So Sony is not just a corp where it's just about gaming. It's way more outside of that. So they're going to slowly come back, but right now this is the best time to invest into them, or if not ETF. So hey, you want to make your money, Sony is. I perceive them having an uptick. But right now they're taking a big hit. So I believe they're going to drop down to $15 a share, if not 17, 16, but 15 in my goal. $15 a share. Shoot, I'm gonna buy it myself. So this is all advice. You can invest the way you want to. I hope you enjoyed the video. I'm gonna catch you guys on the next one.